Are you sick of the same old things happening every day? Do you wish your investments would work for you so you could live your life the way you want? Imagine a world where you can achieve financial freedom and your assets easily make you money, freeing you from the restrictions of standard work. But what are these magical things that can make people rich and keep them from having to work again? Come with us as we reveal the 8 most important items that can change your financial future. We'll look at the strategies and tips for building lasting wealth, ranging from tried and true investments like real estate and stocks that pay dividends to new and exciting ones like cryptocurrencies and blockchain assets. What do you believe is the key to your financial freedom? Wait until you read this to find out how you can get rich without ever having to work a job again. Many people wish they could become financially independent and never have to work again. These 8 important things can help people get rich and maybe even retire early. Number 8. Cryptocurrencies and blockchain assets. Because of their high risk and great reward, cryptocurrencies and blockchain assets represent a new frontier in wealth generation. Blockchain technology is used by cryptocurrencies like Bitcoin and Ethereum to run decentralized networks that guarantee safe and open transactions. Given that the value of the major cryptocurrencies has increased over the past 10 years, early users of these digital assets have enjoyed impressive gains. Investing in a diverse portfolio of cryptocurrencies carries a high risk of severe volatility and regulatory uncertainty, but it can potentially yield substantial gains. Beyond cryptocurrencies, blockchain technology itself offers investment potential through decentralized finance DeFi projects, non-fungible tokens (NFTs), and blockchain infrastructure companies. These resources have the power to completely transform sectors by offering creative fixes and increased productivity, opening up new opportunities for accumulating riches. However, managing this quickly changing and speculative market requires caution, a long-term view, and an awareness of the inherent hazards. Number 7. Index funds and ETFs. Exchange-traded funds, ETFs, and index funds are vital resources for investors looking to attain financial independence and wealth accumulation with a comparatively low-risk approach. By following particular market indices like the S&P 500, these funds provide diversified exposure to a wide range of assets, including stocks, bonds, and commodities. This diversification offers a more consistent investing path and lowers the risk connected with particular stocks. Because they use a passive management strategy, index funds and ETFs are also more affordable than actively managed funds, often with reduced costs. These funds often do well in the long run, reflecting the performance of the market as a whole and compounding profits through dividend and interest reinvestment. ETFs also provide flexibility and liquidity because they may be traded on exchanges much like equities. For investors looking to develop their money safely and slowly, index funds and exchange-traded funds (ETFs) are excellent tools since they offer constant, market-based returns with no management work. Number 6. Business ownership and franchising. Franchising and business ownership are reliable routes to wealth building and financial independence. Those who own their own businesses can reap the rewards of their entrepreneurial endeavors firsthand, as they reap the earnings that stem from profitable operations and steady expansion. Once formed, a well-managed company can make a sizable profit with little daily input from the owner, especially if a capable management group is in place. Conversely, franchising offers a ready-made company model with tested procedures, a well-known brand, and continuous assistance from the franchisor. This lowers the risks involved in launching a brand new company from the ground up. Networks of other franchisees, marketing plans, and well-established operational procedures are all advantageous to franchise owners. Both business ownership and franchising have the potential to generate large sums of money, passive income, and the chance to create a priceless asset that can be sold or bequeathed to subsequent generations, so enhancing one's long-term prosperity and financial stability. Number 5. Intellectual property and royalties. Royalties and intellectual property (IP) are 2 strong assets that have the potential to produce large amounts of passive income and make a major contribution to wealth building. IP includes inventions such as trade secrets, copyrights, patents, and trademarks, each of which provides a special means of making money off of ingenuity and creativity. Number 4. Peer-to-peer lending. Peer-to-peer, or P2P, lending is a cutting-edge approach to investing that can increase wealth and produce sizable passive income. P2P lending services eschew traditional financial institutions by bringing individual lenders and borrowers together directly. In comparison to traditional savings accounts or bonds, this approach enables lenders to earn higher interest rates while providing borrowers with more favorable loan terms. By distributing their investments across several loans, investors can diversify their P2P lending portfolios and lower the chance of any one borrower defaulting. Although there is some risk associated with peer-to-peer lending, such as the possibility of borrower defaults and economic downturns, these risks can be reduced with thorough borrower screening and platform vetting. Furthermore, a lot of P2P platforms provide tools to aid investors in determining the creditworthiness of borrowers and streamlining the investing process. P2P lending is a desirable asset for anyone trying to diversify their investment portfolio and become financially independent, since it can generate a consistent stream of passive income through the regular interest payments it provides. Number 3. Bonds and fixed income securities. Bonds and other fixed income instruments are essential assets for individuals who are looking to reduce the amount of risk in their investing portfolios while simultaneously finding reliable returns. Bonds are essentially loans, since investors lend money to organizations such as governments, municipalities, or corporations in exchange for interest payments on a regular basis and the repayment of the principal amount when the bond matures. There are many distinct kinds of bonds, such as municipal bonds, corporate bonds, and government bonds like U.S. Treasuries, and each of these types of bonds offers a different level of risk and return. As a result of its predictability, fixed income securities are appealing to investors who are looking for dependable sources of income. Interest payments from these assets have the potential to offer a consistent flow of cash, which is especially beneficial during times of economic uncertainty or transition into retirement. Additionally, bonds can assist in the diversification of an investment portfolio, acting as a counterbalance to the increased volatility of stocks by providing returns that are more solid and secure. Furthermore, despite the fact that the returns on bonds and fixed income instruments are often smaller than those on equities, the relative safety and dependability of these investments make them essential components for the preservation of capital and the achievement of long-term financial stability. Number 2. Dividend-paying stocks. Stocks that generate dividends are an effective means of accumulating wealth and reaching financial independence. These stocks are owned by businesses that consistently give shareholders dividends or a percentage of their profits. A steady stream of passive income can be generated by investing in a diverse portfolio of dividend-paying companies, which can be especially alluring in retirement. Compounding returns are possible when dividends are reinvested through a dividend reinvestment plan (DRIP), which over time greatly increases the investment's growth potential. Furthermore, businesses that pay dividends are frequently well-established and financially secure, adding another degree of security. These equities are an important part of a profitable long-term investing strategy because of their stability, potential for capital growth, and consistent income. Number 1. Real estate investments. Investing in real estate is essential to creating long-term wealth and becoming financially independent. Investors can profit from steady rental income generation and property appreciation over time by buying rental properties, commercial real estate, or real estate investment trusts (REITs). Leverage allows investors to borrow money to increase their returns, and real estate offers multiple tax advantages like interest and depreciation deductions. Since real estate values and rents usually increase over time, real estate can also serve as a hedge against inflation. Real estate is an effective tool for people looking to accumulate sizable, long-term wealth because of its stable revenue stream, tremendous appreciation potential, and tax benefits. Don't miss out on more valuable insights and strategies for achieving financial freedom. Subscribe now to our channel and turn on notifications to stay updated on future videos. Start your journey towards wealth and independence today.